Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. Bitcoin has now broken below the 2025 yearly low. If you still remember, my core thesis has been that all major indicators were aligned to the downside, consistently bearish on Bitcoin. The rebound from 80,000 to 89,000 was merely a setup for the final liquidation event. At that time, I clearly stated that if Bitcoin dropped to 74,400, that would be the ultimate long liquidation level. Now you might be asking, since price has dropped to 73,000 and started to rebound, does that mean the market will recover from here? In today's video, we'll analyze the potential next moves for Bitcoin from both a fundamental and technical perspective and walk through a real-time breakdown. From the weekly time frame, the structure of the entire bull market has been completely broken. And if you haven't subscribed yet, feel free to subscribe to our YouTube channel. I also saw an interesting piece of news. Cathie Wood is calling for investors to sell gold and buy Bitcoin. Whenever big players start shouting like this, it's often part of a distribution strategy. So how should we look at Bitcoin right now? The smart money is completed distribution at the top. Using Wyckoff accumulation and distribution theory, I've already explained the structure before. From here, Bitcoin is likely to decline step by step. What do I mean by step by step? It won't crash instantly. After distribution, price needs to move lower gradually, allowing new participants to believe each level might be the bottom, only to absorb supply that larger players are offloading. A true bottom only forms when most people have completely lost hope. There's also something I've mentioned before, volatility compression. Historically, major Bitcoin bottoms are formed when volatility drops to extreme lows. Right now, volatility is still elevated because Bitcoin needs to keep swinging lower. So calling this the macro bottom is difficult. However, as mentioned in previous videos, when Bitcoin first wicked into the 74,000 area, that was a reasonable left side entry opportunity. Today, price rebounded to around 77,000, meaning a roughly 3,000 point move if you entered near 74,000. At this stage, it's wise to take partial profits and adjust your position to protect capital. From a candlestick perspective, even on the 1 hour time frame, there's no confirmed bullish structure yet. Why were we willing to take the initial risk at 74,000? Because that level coincided with over 200 days of consolidation and represented the final long liquidation node. After liquidity was taken, short sellers who had held positions for a long time needed to close out. Looking at Binance BTC USD funding rates and open interest data from CoinGlass, when price dropped to 73,000, there was a wave of liquidations. Those were likely short positions closing, and as they closed, price rebounded. So this rebound may simply be driven by short covering, not fresh long participation. Previously, I've emphasized watching funding rates during sharp declines. When funding flips extremely positive, it often signals a good short opportunity. This time, funding rose toward plus 0.043, still positive, meaning longs were paying shorts. Yet, the market continued to drop. That tells you sentiment was still overly optimistic before the drop. Now, let's project potential scenarios. There's no rigid prediction here, but if smart money uses similar playbooks repeatedly, we need to be psychologically prepared. Previously, after taking a prior long liquidation level, price consolidated for 4 weeks before dropping again. So if Bitcoin now consolidates around 74,000, that's not necessarily bullish. Using a 1-to-1 channel projection, the measured move points towards 74,000, and if that breaks again, the next projection could extend towards 65,000. On the weekly time frame, the next short-term level where the probability of a rebound becomes higher than immediate breakdown would be around 64,000. Which also aligns with the midpoint of a larger consolidation range. That could be the next area to monitor for a short-term bounce. Returning to the daily time frame, let's review recent market behavior. At 80,600, we saw the first major drop. Then price rebounded toward 98,000, convincing many that the bull market had resumed. When price dropped again, the first test didn't immediately break down. As I mentioned before, that initial double bottom style reaction was likely just preparation for a deeper decline. On lower time frames, notice a key rule. From 90,000 down to 73,000, the 1 hour bearish structure has never been broken. Each rebound has failed to break the previous high. As long as each lower high remains intact, the short-term structure is bearish. Only when price breaks above a clear double top region and confirms with a pullback and continuation can we consider that the short-term decline might be exhausted. From a broader perspective, every grid lower may simply form another consolidation channel, designed to attract new longs before another leg down. One more important signal, MSTR, MicroStrategy. It's often treated as a Wall Street proxy for Bitcoin sentiment. Its key long liquidation level is around $101.98, Until that level is fully tested, it's risky to confidently call a macro bottom in Bitcoin. Alright, that's it for today's video. See you tomorrow.